Right, we have some breaking news coming in. Well, November combined inflation rate, the CPI data for India market is out. This number stands at 5.55% versus 4.8% in October. So inflation clearly has increased. This is, of course, above. This is, of course, within the RBI's tolerance band, although on the upper side of that tolerance band. In fact, RBI's expectations for Q3 FY23 stand at 5.6%. And to discuss more on CPI inflation data that's just come in, I'm now joined by Indraneel Pan, the Chief Economist at Yes Bank, and Madan Sabnis, Chief Economist at the Bank of Baroda. Thank you very much, gentlemen, for joining me on ET now. Indraneel and Madan, I'd like to take your first comments on today's data that has come out. Of course, it's on the upper side of RBI's tolerance limit, has increased from the October data that was out. What is your assessment on where inflation in India is headed?
If that question is for me, I think our estimate was 5.51%. Yes. We were seeing some bit of an upside in terms of the data because of the weaning out of the positive base effect, a factor which was critically influencing the 4.87% that we had in the last month. Some of the vegetable components had been on the rise, especially the tomatoes, onions, and potatoes. Other vegetable prices were sort of on a softer trend. But I have not seen the internals yet. But on the first hand information we have from the NHB, cereals prices were relatively higher in terms of a month-on-month increase compared to the last month. So all that would have accounted for an increase in the CPI. And let's not forget even gold, which is likely to have pushed up the other personal services category within the CPI core.
Right, so gold having pushed the other categories. Madan, what's the word from your side on the recent inflation data?
Okay, we were looking at a number of 5.7%. So I think broadly speaking, we are on target at 5.6%. Now, the important thing to note is that this inflation number, the headline inflation number, is going to be driven a lot by food prices. And we have seen that food inflation is something over which nobody really has any control. And I would tend to believe that this food inflation number is going to get slightly nastier as we go ahead. Not just because of the fact that the current increase that we're seeing in categories like cereals, pulses, vegetables, and I think vegetables is the one which is very, and also spices. I think that's another thing which has a low weightage. But we've generally seen that there have been supply constraints, production levels have been down for most of the kharif crops. I think that's what's really getting manifested here. And the reason why I say that things are going to get a bit nastier is that if you look at the Rabi sowing pattern as of now, we are actually trailing that of last year, which means even crops like wheat, chana, which is a major pulse which is produced here, could be tending to show higher price increases. And we've already seen this in the market. So I think there's going to be a kind of a distinction between food and non-food inflation. Non-food inflation, that's what we're calling core inflation, is something which will continue to remain benign. And that's something which the RBI has also reiterated. But when you look at food inflation, I think this number is going to keep remaining in the higher trajectory, which really means that even in the month of December, like we are all experiencing higher prices of vegetables in the market, higher prices of pulses, we could be having a high number coming in, maybe 6%, maybe slightly higher than that also in the month of December.
So you're saying, Madan, that even in the month of December, inflation, especially food inflation, is not going to sort of die down. It's going to get nastier as we go ahead, quoting you. But Indraneel, getting a word from you on where do you really see food prices, and when will they finally start abating?
Well, I completely take Madan's comments as valid and extremely important in terms of guidance for the inflation. So basically what he is wanting to indicate, and which I agree, is that supply side factors are necessarily more influential in the headline inflation rather than the demand side factors. Now, of course, the jury is out in terms of what is the type of growth rate that India has. And if broadly we are all accepting to a 6.5 to 6.7% number for the year, whether that to a certain extent is higher than the potential growth for the economy, and whether that is inflationary, that also really sort of matters. While we are discussing all this, if we sort of look at the inflation expectations survey that the RBI does, inflation expectations 1 year ahead has definitely increased. So one, yes, it's a push from the food side, and supply side concerns will continue. And as we head into, say, even the next sort of season, see the tomato season in terms of the June and July supply, the RBI studies also show that every year the peaks have been higher than the previous year. So that also needs to be kept in mind when we are doing our inflation projections. So it's a bit of a sort of a very sticky scenario for inflation, in my opinion, at this point in time.
So a sticky scenario in your point of view, Indraneel. Madan, I'd like to come back to you and get your views on where do you really see the RBI rates trajectory? A cut not looking imminent, it perhaps is a distant thing then we should all be bracing ourselves for?
Yeah, I think you said it right. I think it's quite a distant thing which is going to happen. Because if we just go by the forecast which the RBI has put out on inflation, I think we're going to go less than that 5% mark only in the second quarter of next financial year. So we're talking of July, August, September. That's when inflation would be 4%. And then I think, if I remember right, it's supposed to go up to 4.7%. So until such time that the inflation number hovers in the region of 5% or more than 5%, it's going to be very difficult for the market to accept that the RBI is going to cut rates. So unless, of course, there is one of these instances where the inflation number suddenly crashes to less than 5%. But that doesn't seem to be the case. As I mentioned, the food inflation part will remain sticky in the upward direction. And therefore, I think the earliest that we can expect the RBI to think about changing the stance or even reducing the repo rate would be in the second quarter of next financial year. Till then, I think it's going to be status quo, and the withdrawal of accommodation stance will continue.
Right. Indraneel, let me come back to you and get your view on core inflation, and if that's reasonable. The numbers state that at 4.1%. How do you see that?
Well, I think core inflation obviously is softening. Which is a good thing in the sense that that is also enabling the RBI to preserve the inflation, the headline inflation within the corridor. Now, along with the inflation, which is again a 43-44% of the overall inflation basket, if core also would have risen, that would have been quite a disastrous situation in terms of policy making from the monetary policy's perspective. Now, having said that, I think we are expecting core inflation to soften going forward. And the core inflation is more representative of the demand side of the economy, while the food, I would say, is more representative from the supply side dynamics. On the demand side dynamics, we are therefore expecting the RBI's tight liquidity conditions, higher rates for longer, and the very fact that there's a continuous sort of push from the RBI's perspective in terms of pass-through of the policy rates to the real economy. All that will play through in terms of reducing the demand side factors and therefore cooling of core inflation. Now, having said that, again, I think the pace at which the core inflation comes down will possibly be slightly more muted as we go ahead. So the point being made is that most of the adjustment on the core inflation possibly has been done. And that is another factor that needs to be watched out for, because everywhere and always we are talking about sort of supply side surprises from the food side, which can give you some surprise on the headline CPI also.